Back to work, back to work. It's about that time of day again here, folks, isn't it? It's Monday evening. It's April the 8th, 2019. My name is Joseph, and this, of course, is your nightly newsletter. Now, remember, I help new traders find predictable, reliable, dependable, profitable trading opportunities using a simple three-step trading strategy that we teach and trade together every morning in our trade room. But my job tonight is to identify the best opportunities we see setting up for tomorrow. That's Tuesday's trading session. And we're going to cover oil, S&P, Nasdaq, gold, and euro in tonight's video newsletter. I'm going to jump in here to oil first because crude oil is right at a critical point to make or break this big bull run that we saw earlier in today's trading session. I jump into oil here tonight. You can see oil, of course, running higher here. Anytime I see a big, strong move in one direction, I always expect to see a two-legged pullback and a retest of that high. Well, here we are now. We're back retesting that high right now. And at this point, this is the last place I want to be buying. All I want to do up here either is hold an open position or take profit on any positions that I have open already. So, knowing that we have a bull market, but knowing that we're right at that, what I call the objective, I've really got to wait for more information. Do we run higher? I get a big target waiting overhead up at that measured move, or do we pull back and give us more like a spike in channel? The bottom line is I've got a plan whether or not we go higher up to that measured move, the specific patterns I'm looking for, along with if we get that pullback. And I'll give you a hint. I really hope we get that pullback because I would love to get my hands on this is a spike in channel. We're going to grab a look at the oil market here in much more detail, if it goes up, if it goes down, and if it goes sideways here. So stay tuned for the oil chart in just a moment. Over on the S&P, now the E-minis, the Nasdaq and the S&P are both in similar situations. We had that strong move up on Friday, right? Non-farm Friday. We got that deep pullback, and now look where we are. We're right back around those same highs again. Whether or not you want to call that Friday's highs or Sunday evening's highs, we are right back at the same spot. So critical spot here for these buyers, right? Do they hold the pullback and keep going? Do they run through these highs, or do we collapse back down into that trading range? I know where the buyers want to go. They probably want to get that pendulum swing up around that 2903 area. But I do not want to be a buyer up here as they go back and retest those highs. So what's the plan? Well, the plan is be ready for the mark going up, be ready for us pulling back, and be ready for us collapsing all the way back down. I'm going to put those three scenarios together along with all the different entry patterns I'm watching for in just a few moments. Over on the Nasdaq is in a very similar situation to its brother, the S&P, or sister or cousin, or whatever you want to call it. The Nasdaq also, of course, right, we go up non-farm Friday, we pull back in reaction Monday, and here we are right now. We are right up around that retest of the high. Way too high to be buying this market right now, but we are one heck of a bull market, though. We get a pendulum swing, getting ready for a target up here. Got a measured move, getting ready for a target. So man, oh man, between, again, we're bullish on this right now, but between a retest of those highs, the measured move, the pendulum swing, no thanks. I don't want to be a buyer up here. What I'd like to do is wait for a pullback. And that pullback might be a shallow pullback for a buy, but it may also be a setup for a reversal here tomorrow as well. So I'm going to put both of those options together, and we'll see which one we get tomorrow morning. But stay tuned tonight here on the video because I'm going to break that down in a lot more detail here on the Nasdaq. Over on the gold right now, boy, gold, we call it Reaction Monday. This is the Monday after non-farm payrolls, and boy, did we get the reaction today. Strong two-legged move up, and then sure enough, a 1, 2, 3 reversal. Now, if you follow this newsletter, you probably already know what we look for after that 1, 2, 3 reversal, right? I'm going to find that hidden channel and then sell into those buyers right now. So I'd like to get this market up so I could sell it back down. But honestly, with that big round number right below us here, we may see this market kind of grind lower into a trading range. I'll talk about my plan if we get the pullback. and if we get that trading range, along with what a reversal would take too, because I wouldn't be surprised if the market turns back around again, but I have to have a specific pattern I'm watching for on that move higher. We're going to grab the yellow metal and break down the gold chart in a lot more detail in tonight's video newsletter. And of course, over on the euro, a very strong bull run into a trading range. I call these a spike and range pattern. Spike and range patterns are very easy patterns to trade. I'll talk more about them tonight on the video, but I think this trend line coming down, I think that trend line coming down is going to be our biggest clue for buying opportunities as we go back up to retest that measured move. You'll notice we get some big targets overhead here on that measured move, around that 13,450 area here. So just like the S&P, the Nasdaq, and the oil, I don't want to buy high right now. I want to buy that pullback, and we'll talk about the patterns. I'm looking forward to buy that pullback as we dig into tonight's video. Before we jump into the charts for tonight, I want to make sure you never miss a video here at School of Trade, and to make sure you never miss a great newsletter, head over to our blog at sidewaysmarkets.com. I'll put all the links in the description of the YouTube video, and make sure you join our mailing list. Right here at the top of the homepage, all I need is your name, your email address, and then hit that subscribe now button, and make sure you check your inbox, because I'm going to send you a welcome email with lots of goodies. So not only I can help you get the most out of our nightly newsletter, but I can give you guidance, right? So you can make the most, right, of your brand new trading career. So make sure you never miss another video. Stay tuned in on our nightly newsletter every evening. I'll send you an email every evening this newsletter goes live. All I need is your name, your email address, and then check your inbox to verify that email. And then I need your help. One more thing here before we jump into our charts here tonight. Which market do you trade the most? What's your favorite market? What market do you want to learn more about? Drop me a comment in the comment section below. I'd love to know which of these 5 markets, crude, S&P, Nasdaq, euro, gold, what's your favorite? Or if you're not trading gold, are you trading some sort of ETF? You trading the CFD? What are your favorite markets to trade? How do you use this newsletter? I'd love to learn more about how you use the newsletter every evening. So post me a comment in the comment section below. And while you're down there, give me a thumbs up if you love this newsletter video and you tune in every evening. It means the world to me to have all your support right in the comments, and of course those thumbs up buttons right on this YouTube channel. Thank you so much for giving me that feedback in the comment section. And don't forget, I'd always love to talk to you guys too. If you have any questions, any comments, any concerns, or maybe you don't want to post in the comments and you want to call me in the office, I am always listening. So pick up the phone and call that toll-free phone number in the upper right-hand corner. I look forward to hearing from you. All right, let's jump into our calendar here for this week. This is the second week of the month, right? Second week of the month of April. First week is behind us. We survived the non-farm payroll Friday, right? Now here we are in that second full week. Now, the second full week of the month is oftentimes a relatively quiet news week, but this is not going to be one of those weeks. We have a lot of news coming around the corner here as we go into this second full week of the month of April. First of all, tomorrow, Tuesday, April 9th, is going to be a relatively quiet news day. There really isn't much on the calendar. There's no Fed speak. There's no central bank meetings. There's really no major news reports. I get the JOLTS report tomorrow morning at 10 o'clock Eastern time, which means if I had to guess tomorrow, I would guess the big fireworks are probably going to be around that 10 o'clock hour tomorrow morning. So we'll definitely be tuning in tomorrow and watching that block around 10 o'clock very, very closely. As we go into the rest of the week, though, we start breaking out a lot more news. On Wednesday, I've got the ECB meeting late afternoon or early afternoon in Europe, right? Early morning, of course, here in the U.S. We get inflation, we got inventories, we got FOMC. So Wednesday is going to be like the news coupleless, right? It's going to be a huge news day on Wednesday. And then, of course, on Thursday, we've got jobless claims, PPI, inflation again, and a bunch of Fed speakers on the schedule for Thursday morning. before we wrap up right with a relatively quiet day on Friday. So really, tomorrow and Friday are going to be the bookends of kind of wide open spaces. Thursday and Friday are going to be busy. Lots of news on Wednesday, right? Lots of news on Thursday. So tomorrow appears to be a very good opportunity for us. Have a full trading day ahead of us. No major distractions, no big announcements, and hopefully we'll have a nice full session of trading opportunities. Don't forget, tomorrow morning, we're going to open up our trade room at 8 o'clock Eastern time, and we'll execute this strategy together with all of our clients. Speaking of strategy, let's jump right in. Now that you guys on the plan right for tomorrow, no major news tomorrow, but then Wednesday and Thursday, it's going to hit us like a brick. And then, of course, we'll leave on a quiet note right on Friday. All right, let's jump right in. Got a lot to cover here tonight. We're talking oil, E-minis, gold, and euro here on the charts tonight. I'm going to start off here with oil. Oil is a bull market, a strong bull market, I might add at that. Anytime I see a strong move in one direction, I always expect to see a two-legged pullback and a retest of that high. Now that we're at the retest of that high, now it's kind of a wait and see, right? Wait and see where we go next. Do we break higher here? And if we do, we want to be ready for whatever patterns we get and where our targets will be, or do we pull back off the high? If we pull back off the high, it's not a reversal, it's just a pullback in a bull market, and we want to be ready to buy right at major support levels. At the same time, I also want to keep my eyes open for a possible reversal. So we'll also talk about what the plan is if the market reverses as well. Most important thing right now, though, is it's bullish. And when it's bullish, I want to buy at support. So naturally, the easiest way for me to be confident and excited about participating in this market is going to be if we get a pullback here. Now, what I've done is I've marked up a trend line off of these highs. I've then marked that down to that low, and that's creating a key level of support that I can use for my entry patterns. Keep in mind, if we also end up going higher here, I'll also adjust this channel, and so that channel may end up becoming a little bit steeper as we go. So it's going to keep that in the back of your mind, right, as we're going over this analysis, right? This may end up kind of shifting a little bit higher here, right, overnight. Just be aware of that, right, in the overnight session. Bottom line, though, is I want to get that pullback, right, to be a buyer. And there are ultimately three different patterns. I've got my buy zone down here, my battle zone. That's where I want to be a buyer. I'm not just going to blindly buy that low, though. What I will do is I'll look for the pullback. I'll look for that moving average to come over. I'll look for the sellers now to sell off the moving average. That tells me I know where their stops are, and I can buy right into those stop losses. You can see an example of this back here. Go down, pull back, go down, right? Nice, easy break higher. Now, our job's not over because oftentimes that moving average comes over, and guess what? It pulls right back again to that moving average. Hey, look, there it is again over here, right? Pulls back and goes. So we call these failure patterns, and we call them pullback patterns, right? Pullback patterns. So there are two easy patterns as we get that pullback. Again, imagine now the market pulls back. The bears, they try to sell the pullback. They fail, and we buy into their failure. We don't want to chase after it going higher now. Now we wait, and we buy the pullback for that rally higher. That's two patterns I'm watching on the pullback. But there's one more setup I want you to keep your eyes on, and that is the two-legged pullback. Two-legged pullbacks are just like the name suggests. The market pulls back off the high, runs into the right, runs higher, and then shoots lower. Two-legged pullback. 1, 2. Draw that trend line down. Now use that trend line as that key level of support to buy nice and low off of that low. You'll notice we didn't get that example here, right? That wasn't a two-legged pullback. That was just a one-legged pullback. So again, it's a single leg, right? It's a failure at the moving average, right? A failure at the moving average. It's a break up, a back, and a go, right? That's that same pattern we saw here. Or watch the trend line coming down, one leg, two-legged pullback, up and over, right? And we go. Perfect. That's if the market pulls back. Now, what if the market stays going sideways here? You know, sometimes we'll get up to retest these highs here, and the market will just kind of sit up here. Okay, it's not a reversal. It's not a time to sell. It's still a bull market, but for whatever reason, the buyers just aren't making any progress up here, right? If you were an old school trader, right, you would call that what? You would call that accumulation, right? Buyers are accumulating more positions up there as those sellers are distributing them, right? Some of the old school trading books will call that accumulation and distribution. I call it a trading range. Right? So once I start seeing them go sideways up there, call it whatever you want, accumulation, distribution, it doesn't matter, right? It means we're bullish into a trading range. Now, anytime I see a trading range environment, the plan is pretty simple. I want to buy below the low of that range, and I'm going to use a very specific pattern called a two-try failure pattern. Let those bears try once, let those bears try twice, and we're buying into their failure. Again, this is if the market sticks up here and ends up going sideways. That's the pattern I'm looking for. But what if the market keeps going? Where would their target be, by the way? Their target at this point now would be, well, you got one big leg higher here. Second leg, of course, would be a measured move. That measured move puts us all the way up at 65.16. Now, $65 a barrel is a big mental milestone, right? It's a psychological milestone. 65 sounds very close to 70 and maybe 75 and maybe even 100, right? You see how quickly your brain starts to kind of play on that number. So I'm not saying we're going back to 100 right now. What I am saying, though, is that milestone, that psychological milestone of 65 is right around the corner here, right? It's only 50 cents higher here on the crude. But we have a problem, though. I can't just start buying high, right? If it was as easy as buying when the market goes higher, we'd all be rich. Well, actually, none of us would be because the markets wouldn't even exist, right? The only reason why the markets exist is because we have a system, we have an environment where, right, buyers will buy low and sellers will sell high. So I have to assume that sellers are going to want to sell off this high here, but what would I look for as the market goes higher here? How could I feel confident that I can be a buyer? There are two basic patterns that I want you to think about as we try to go higher here. One is the two-try breakout. It's very simple. Strong breakup. The keyword is very strong breakthrough. Then one, then two, and you're buying into their failure. I call this a two-try breakout because as we break out, we let the bears try once, we let the bears try twice. Now, why not just buy the break higher? That seems easier. Well, what would have happened if you bought the break higher back here? Exactly, right? You would have ended up taking a loss or got into a lot of pain for a while before the market came back up. So instead of just trying to buy as the market goes higher here, because it could easily come right back down again, what I'll do is I'll let the bears try once, higher high, let them try twice, and once I see those buyers are resilient enough to absorb those sellers two times and absorb the profit taking twice, then I know I can safely buy into their stop losses. Another pattern like up here is a spike in channel. We oftentimes see these 1, 2, 3 spike in channels, right? Where you'll mark up that high, mark up that new channel, and find that channel and buy off that channel. Right? So two basic patterns as we go higher. One is a blast, right? Big blast, 1, 2, buying up in. The other one's a little bit slower. It'll go up, it'll pull back, it'll go. That's how you know it's a channel. Find that high, mark up that level, and there's your sweet spot right there for the pullback. Right? Look for pullback patterns, look for failure patterns. And we'll drill into that in a lot more detail tomorrow morning once we get together in the trade room. So now we've got three basic scenarios. If price pulls back, we know the pattern's there. If the market goes sideways, we know which pattern to look for there. And we also know the danger of buying high. And we know we want to look for those specific breakout patterns as we go higher. But there's one more thing though. How does this market turn bearish? What does the reversal look like? Well, first of all, look what happened here. The market pulled back strong off that high. Was that a reversal? No, what happened? The sellers failed to hold the pullback. That's what we need for a reversal. To get a market to reverse, what I need is a strong move down, a pullback to the moving average, and then I need to see strong move off that moving average. Then I have what we call a 1, 2, 3 reversal. I'm going to mark up that low, find that high, and sell off that high for that hidden channel pullback, right? The hidden channel pullback. Where is that target? That target is now back down to retest that low at that 63.13. So we've got all the bases covered here on the oil. But there's one thing I want to make sure I remind you about. I've talked about failures, 2-try pullbacks, breakout patterns. We've talked about pullback patterns. I want to teach you more about all my favorite patterns, but I don't have a lot of time to do it in this video. So if you want a great deeper dive into the entire strategy I use in our trade room, and of course, if you want to learn all my favorite patterns, what I would recommend is take our free trading course. Don't let the name fool you. This free trading class is packed with information that most websites will charge you thousands of dollars for, right? I just updated our free trading class. Our clients love every minute of it. Grab that link in the upper right-hand corner or grab that big red button below the video tonight on the blog. Register for our free class. Learn more about what I call the 3-step strategy and, of course, all my favorite entry patterns, because I want to share as much as I can with you every night on this newsletter. But if I share everything, though, I'll be here all night long. And, of course, you guys, right, are busy people. So grab that free course. I'm going to keep moving on, right? And you get a much deeper dive into the strategy inside that free trading class. Now, over to the E-minis. E-minis, they look a lot more complicated than crude oil does, but they are in very similar situations right now. We had that big run up on Friday, right? That jobs number did very well on Friday morning. And then, of course, we got that pull back. And now here we are. We're right up, right? We're right into that same spot, the high of that move on Friday. Now, why is this a horrible place to be buying right now, right? Not only is this resistance, but this is an area where you would expect to see a lot of buyers doing what? Taking profit. And I'm sure there are a lot of sellers who are trying to pick tops and bottoms on this as well. So I don't want to be a buyer up here. This is not a great spot to be a buyer. So what would I rather do here? I'd rather make sure, just like on oil, I'd rather make sure we either pull back, or if we go sideways, or if we jump higher here. Now you'll notice, right, we don't exactly have as much open space on the E-mini that we did on the oil. So oil is going to be a little bit easier to get that breakout. The S&P is not going to be as easy because if you recall last Friday, the day spent a lot of its time last Friday inside of that trading range. We get the amount of the move below the range. That allows me to create what we call the pendulum swing. And again, you'll learn a lot more detail about the pendulum swing inside that free trading course. I won't go into too much detail on it right now, but again, you can learn more about it in that free trading course I mentioned earlier. That pendulum swing is a major market objective, right? That's the big target right now. That's the big target right now for those buyers. We have to assume they're trying to get back up to retest, right, or get up to test that pendulum swing. So we know we're bullish, right? We know we're bullish. We know we're sitting right at a major level of resistance. That's my biggest concern right now. And honestly, if we go higher here, we're not too far away from another level of resistance as well. So we really got to be careful buying high right now on the S&P. Oil has a lot more room to breathe than the E-mini counterpart. Now, the good news, though, is as we get deeper into this chart, it's pretty easy to see this is a very strong bull market, right? It's a very strong bull run. You can tell the market barely even pulled back to the moving average as it was rallying higher here, right? Late morning, early afternoon. So we know this market is bullish. We know there is a lot of momentum now with this market going higher. The problem is I just don't want to buy up here, right? I just don't want to buy this high on the chart. So what's what's the plan here, right? What's the best way for us to be a buyer here right now? Let's find some levels of support. I'm going to clean this up a little bit here for you guys, right? Where can we find some levels of support so I'm not buying right into, right, that overhead high here? First of all, let's find a hidden channel. Take that trend line off those highs, bring it down to that low, and that's going to give you what I call a hidden channel, right? It's a level of support that not a lot of people are going to see, mainly the sellers. Because now, if I can get a pullback down to that hidden channel, I can then get one of those seller failure patterns I mentioned on oil, get those sellers, try to sell into the moving average, I can buy into their failure, and then buy the pullback, right? You know, just like we saw back here, right? They pull back, the bears sort of sell off the moving average, and of course they run higher. You'll notice in that example, they didn't get the pullback. Oftentimes though, we do. Okay, so I'm really watching the low of that hidden channel. Now, I can also see, if I make this a little bit darker there, I can also see here a double top there, draw that across, and now up we go. That's a great spot for a buy as well. That's a great support level there. And look where they all line up, right? The low of that channel lines up right there. The trend line comes in right there. That's a great spot to be looking for a buying opportunity. So it's almost identical patterns we talked about on oil. If I do get that pull back, get below the moving average, let those sellers sort of sell off the moving average, and then again, we'll buy into their failure. We won't chase after it though. Don't chase after it. Wait to buy the pullback, right? And buy the pullback up from there. Now, don't forget that two-legged pullback pattern, right? Keep an eye on the two-legged pullback. 1, 2, up and over, right? We call those two-legged pullbacks. You'll learn more about those in our membership classes and, of course, that free trading course, right? That's a great pattern if we get the 1, 2, and the pullback. What if we go sideways up here? It looks like they might be going sideways up here, right? As we go sideways, what's the best pattern if we go sideways here? Get below that range. You got it. 1 try. 2 try, right back up. Good job. Let those bears try once. Let those bears try twice. And then we're buying right. And again, you can see how easily it is to get those levels to line up, right? It really comes together nicely here, but we got to wait for that pullback. Now, this is the big difference between the E-minis and the oil market. On the oil market, we had plenty of space up to that $65 a barrel area on oil, but we don't have that here, right, on the E-mini. First of all, if I do have a strong move, there's 1, there's 2, there'll be 3. So if we do get that pullback, be aware of that measured move up there. But the big thing, though, is that pendulum swing, right? The amount of the move below the range is the amount of the move above the range. I've got that key level of resistance there, right, waiting overhead. So I've really got to be careful here. So if I have to be careful and I don't want to buy into resistance, guys, remind me here, what's the best pattern to use to avoid buying high, to avoid the losses that come from buying into resistance? It's a trap pattern. Now what I want to see is I want to see move up. I want to see a 1, I want to see a 2, and a trap low. The reason why I need to see a trap on this one to buy that trap low is because I've got that pendulum swing. I've got that major resistance area, right, waiting overhead. So again, if you want to buy this thing as it goes higher, make sure you get that strong move up. 1 try for the bears, 2 try for the bears. That second try for the bears should be a trap low because why? We have major concern about overhead resistance, and the best pattern to buy into resistance is going to be as low as possible. So we always look for, right, that trap setup. So now we've got a great plan here. We know we want to get the pullback. We don't want to chase the market higher because of overhead resistance. Now all we need is a few more candlesticks. Let's keep going. Over to the Nasdaq here tonight. The Nasdaq is in a very similar situation right now. Yesterday or last Friday, right, non-farm Friday, we spent a lot of time inside of that trading range, right? We spike up, we crank lower. The size of that move below the range is oftentimes the size of the move up above the range. What does that matter? Because now we have major level of resistance up there. At the same time, we can also see one leg, two leg. There's a measured move. So we've got a bunch of resistance up around that 76.30, 76.33 area. I do not want to be a buyer up here, and we are we're way too close for comfort right now, right, for me to be buying high here. So what's the best plan of attack? Well, I've got this channel I've drawn on, right? I'm drawing off these highs, bring it down to that low. Gorgeous looking channel here right now. Anytime I see a channel this well behaved, I always know a pullback and a retest of that high is highly likely. So I'd like to be a buyer on that pullback. You'll also notice if we go up, pull back, and go, you'll also notice I've got that little what I call a reversal line there at 76.05, 76.06 and change there. That will also be a great spot for me now to try to buy that pullback as well. So these are some really great opportunities we have here if we can get a pullback, right? So of course in a pullback pattern, I want to see price pull back. I want to see a nice deep pullback, get below that moving average, let those sellers try to sell off the moving average so I can buy into their failure. Don't chase after it. Wait to buy the pullback from there. It's a failure pattern to a pullback pattern down inside that buy zone we labeled earlier. At the same time here, keep your eyes open for a two-legged pullback. These are very common, right, when we're running out of space here. Get up and over, right? Get up and over that trend line and use it as a level of support. So the patterns are pretty easy if we get this thing to pull back here for us. The hard part's going to be if we go sideways. Bull market, right, into a trading range. Bull market into a trading range. What do? We buy below the range. What's the pattern? The two-try failure pattern. Guys, as you can see, I use the same patterns over and over and over again. Kind of like an Italian restaurant, right? Use the same ingredients in different ways, right? We get amazing Mexican restaurants right here in Los Angeles. It's the same ingredients, right? Beans, rice, right? A little bit of salsa here and there, some jalapenos, and right, there's a million different ways that you can use it. Boy, it got me hungry even thinking about that right now. But the bottom line though is, right, comparisons. Trading is a lot like everything else. We use the same basic ingredients. We just apply it to what we're seeing right now. So of course, on the Nasdaq, I know I've got that bull market. I know I want to buy. I don't want to buy high. Will it pull back and give me a chance to buy the pullback? Will it go sideways and force me to stay patient and wait for the one and the two and the go? Right? Only time will tell. The hard part's going to be as we go higher here. As we go higher, this is even worse than the S&P. The S&P had a little bit of remote overhead. This has very little open space here overhead. So I've got to be worried here right now about buying high here. So what are a couple options? What would it look like for me to buy a breakout? And then what would it look like for me to want to sell this thing? Let's think about that, for example. Well, let's talk about one. Let's go higher here. We talked about these earlier, right? Two patterns, right? One is the two-try breakout, one and two, and go. We don't have as much concern about resistance over here, so I don't need to get as much of a trap here, but I want to see one, two, and then buy into those stops. See, if the market breaks higher here, what's going to happen is you're going to see buyers taking profit. That'll pull back. Then you'll see sellers trying to sell into that pullback. They oftentimes will reverse this market at that point. But if they don't, now we know right where stops are, and now we can buy right into those stop losses. Let those bears try once, let them try twice, and then we'll go from there. Now remember too, where's our target at that point? Our target will be one leg, two leg, and then wherever we get that deepest part of the pullback, that's where you'll draw, right, your measured move from, right? So use that same distance. And again, I'll teach you more about this in our membership classes in the free course as well, right? But the measured move, of course, will be drawn up from there, right? So use that measured move, and that will make you, that'll give you the confidence to know where that target's going to be. Now, what if the market goes up into a channel? This is very common, right? Very common here is going to go up 1, 2, 3. Then we mark up that high, find that new channel, and we'll buy the low of that channel. And again, we're using that 1, 2, 3, right, to measure the distance for that final target. All right, guys? Now, how about a reversal? What would it look like to sell this market right now? Well, remember, as I said a couple weeks ago on the newsletter, it's all about the moving average. For example, what I'm looking for tomorrow to buy this market is I want to see the market get below the moving average and have a difficult time getting away from it. I'll buy into their failure. But if I see this market, if I see it do what gold did, and you'll see gold in a moment, but if I see gold do this, if I see the Nasdaq do this, right, come back and run off of that moving average, right? If it runs off that moving average, now what I'll do is I'll go back in time, I'll find some hidden channels, and we'll start looking to sell off the top of that channel. So remember, right, a pullback will do this. A pullback will do this. The moving average will come over, will pull back, and the sellers won't be able to get anywhere off that moving average. That tells you it's a pullback, right? It's a pullback if every time the price goes below that moving average, the buyers quickly grab it or the sellers can't get away from it, right? So if we pull back below that moving average and we don't see the sellers being able to jump off that moving average, that tells you right away you're still bullish and we're buying into those failures, right? Failure into pullback and back up. However, if we see that same pullback, but now the moving average comes over and we jump off of that moving average, guess what? That's a reversal. The fact that the sellers are jumping off of that, it's not the sellers who are doing it, it's the buyers. The buyers are effectively walking away. So what happens a lot of times is you'll see it really jump off that moving average. Then we quickly hurry up, find that new channel, mark up that hidden channel, and look to go up and sell it, right, as it's now coming over. That's a great selling opportunity, but we've got to get that momentum to turn right first, right? How do you know the difference between a pullback and a reversal? The moving average. The secret is in the moving average. As we pull back, do those sellers get stuck, right? If they can't get away, it's bullish still, right? Or do we pull back to the moving average and the sellers just bam, right? They jam it lower, mark up that low, up to that high, and again, looking to sell off that range high. It's a very subtle difference, but when you know what to look for, you know the difference there between a pullback, right, and a reversal. It all has to do with how that market responds around that moving average. Nasdaq looks great. Now we're ready to rock and roll the Nasdaq. How about some gold tonight? Now, I mentioned this, right? Talk about gold being a great example of a reversal. Strong move up. What happens? We pull back, pull the moving average. This would have been a gorgeous failure pattern, right? That would have been an easy failure pattern, an easy channel, right? Been a great failure with the low of that channel here, but what happened? It didn't. It jumps off the moving average there. So now what do? We go looking for a hidden channel here right now. This is the same thing we just talked about on the Nasdaq, right? We mark up those lows. I don't have much to work with here as far as a hidden channel here, you'll notice. So I'm going out a little bit further, marking off that low. Beautiful little wicks, those highs, marking up those highs, and I'm trying to go up and sell off that high. It's the same basic principle as we just talked about on the Nasdaq. Is this a pullback or is that a reversal? That's a reversal. How do you know? Because it jumps off the moving average, right? It jumps off the moving average. If this was a bull market, it wouldn't have been able to get away from that moving average and it would have spiked right back up and retested that high. Just like the patterns we're looking for on the S&P, the Nasdaq, oil, right, and potentially, right, over on the euro here as well. We'll grab that in a moment. Now, looking at this as a bear market right now, we know we have the bears now in control. I don't want to sell low, though. At this point, the buyers have given up. They took their profit. The market sits. oftentimes the reason why it'll sit like this is because now nobody wants to sell this market this low. They want to sell high. So think about it, right? The buyers are having fun. The buyers are making their money. The buyers then give up on it. The price collapses. These are not sellers selling this. These are buyers getting out. So if the buyers got out, there wasn't really any sellers that sold it. Now the market sits here because nobody wants to sell this low. The sellers now are waiting to sell high. Where do they want to sell? They want to sell up around some resistance. So what do? I find my hidden channel, right? I mark up the last major swing, and that creates my sweet spot. That's where I want my sell to be. Now, what are some patterns to look for here? Well, much the same as we went to the long side, but now to the short side. Let's swing it a little bit closer here. And I basically want to see the market go up. I want to see the buyers to buy that pullback. Let those buyers try. I then know exactly where their stops are, and I'm selling right into those stop losses. Again, just get it up in this area. Just get it up off of these lows. Let these sellers start selling high up here. That's the key, right? It's a bear market. Don't let this, right? Don't let that previous run spook you. The bears have taken control. Now I want to go up, get into my battle zone, let these buyers sort of buy the pullback, and I'm looking to sell right into that failure as we go lower, right? It's a 1, it's a 2, it's a 1, it's a 2, it's a failure into a pullback on the way back down, right? Same basic pattern we've talked about for the long side, now on the sell side, right? Again, it's a 2-try failure right into a pullback. Now, what if the market doesn't pull back here? What if it keeps grinding lower here? Then what do we do? Not a lot, actually. If we do go lower here, I'm going to still make sure I mark up those lows, mark up that high, kind of create that as my hidden channel, and I'm looking to buy. Again, same basic idea here. Now we can use a trap pattern into a failure pattern, into a pullback pattern. So if we keep going lower here, now I've got even more options, right? Let's go up, use the top of that hidden channel. It's a trap setup above a prior swing. You'll learn more about traps inside of our free course. It's a 2-try failure setup coming off of that moving average. And of course, it's a pullback setup right off the moving average once those sellers, right, get back in the swing back to the downside. So if we pull back, we're looking good, right? We pull back, 1, 2, and go. If we go lower, we're waiting patiently to go up, trap, failure into pullback and back down. What if we sit here? What if we sit here right now? If we sit here, it's a bear market. 1, 2, back down, right? Let those buyers, remember, if we do sit here, same basic idea as the other markets. It's a bear market though in this case. What do we do with a bear market in a range? We sell high. How do we sell high? 2-try failure pattern. 1, 2, and back down. Again, learn more about that in that free course I mentioned earlier, right? Let those buyers try once, let them try twice, and sell it right back down into that trading range. Where's my target for all of these guys? My target for the patterns is down around that 1295, right? 1295 is the beginning of today's trading session. That will be our target in the short term for tomorrow. In the long term, though, this could get really, really ugly here for these bulls because don't forget that prior month low is right around 1287. So the short-term target back to that 95. Long-term target, though, back around that 1287 here. Now, how do we turn bullish, guys? How do we turn bullish? What if I'm wrong? Or what if this is just a head fake, right? How do we know it's a bull market? We would know it's a bull market because it would jump off the moving average, right? Up, up, and go, right? It would jump off the moving average. Now, if we can get that 1, 2, 3 reversal and we turn bullish, now what do? Yeah, we get a problem here. We're back to retest the high, though. What's the best pattern? Traps, 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 right? Trap patterns. Those are the best opportunities for us to grab that bull market either before we get back to retest the high, but again, make sure though, I'm not talking about some sissy move here, right, then pulls back. No, I'm talking about get up above that moving average and jump If it jumps off that moving average, now you know you've got a bull market back in your hands here. Don't buy high, buy low, trap patterns off that low. Same basic ideas we talked about earlier on the E-minis. Or what? It runs up. We may see one of these. 1, 2, 3, a big old launch. 1, 2, go, right? That 2-try breakout pattern or that new channel pattern that we talked about earlier on this. Beautiful, beautiful chart here on the gold. All we need now is a little bit more information and we're ready to rock and roll here for Tuesday morning. How about some euro? Euro is bullish tonight into a trading range. Nice, strong, big bull move up into that sideways range. Now, these are always very, very simple strategies here. All we're going to do now is wait patiently for a little bit more, right, information here. For example, right, bull market into a range. Notice what I'm doing here. I'm taking the trading range, and that trading range, I'm going to copy and paste it down, create support, create support. I also have kind of this spike up from last Friday. You'll notice I've shaved off the wick on that. It looks like they liked it back there. That's a level of support as well. So this whole area down here, right, off that reversal line into that range expansion, these are all great levels of support here. I want to be a buyer. I want to buy this area and go back up, right, to retest that high. The problem I have right now, though, is we have a trend line. This is that two-legged pullback I was talking about earlier, right? When you find a trend line coming down overhead, I'm not just going to buy into it and just hope for the best, right? I'm going to make sure I mark up that 1, that 2, then we'll go up and over, and we'll try to buy right off of that low. Now, you might be wondering, could you combine all of these patterns, right? Could you combine this? Could this be a two-legged pullback into a failure pattern, right? Into a pullback? It definitely could, right? It definitely could. It's not very common to get all of them together, right? 1, 2, up and over. That would create your two-legged pullback. That would create your failure, and then that'd be your pullback pattern. Usually, though, we're going to get at least 1 or 2 of those, right, in this sequence. Okay, so two-legged pullback pattern. Make sure as this market goes lower here, make sure we get it down, up and over, and use that trend line. The key to a good two-legged pullback is getting it to go up and then over. For example, what you don't want is you don't want to do this. You don't want to buy this one. This is a grinder. Grinders are very difficult to tell which of these pullbacks to buy. Make sense? What I want is I want this market to go up and over. That's the trick. The trick to a two-legged pullback is up, over, and go. It'll feel like you've missed the move, but just you wait. It'll pull back and give you a great spot there to buy right on that deep pullback here. All right, guys? Beautiful example here of a bull market into a trading range. I want to buy that pullback. In this case, right, it's a two-legged pullback. I love this area down here. 1, 2, up and over, right, and go. All right? What if we keep going sideways here? If we keep going sideways, that will kind of gobble up that trend line. So if we keep going sideways here, just wait for the 1, the 2. Remember we talked about it earlier, right? The 2-try failure. 1 try for the bears, 2 try for the bears. Yep, then we'll buy right into those stops. Now, what about going higher here? Ooh, see, this is going to be difficult. Bigger picture here real quick. I don't normally bring this much data involved here, but I think it's important in this one because this is that big low, right? That was that big low from earlier on in the month. We got 1 big leg up, deep pullback, 2 big legs up. This might be nothing, but right now it's a little bit too close for comfort, right, around that two-legged move here right now. So as we go higher here, what would a breakout look like? And how could I sell this market tomorrow? Well, the breakout pattern would be that strong move up, right? The 1, the 2, that 2-try breakout, right? 1 and 2, and you're buying into those stops. Or it's the 1, 2, 3, you got it, right? Find that new channel, right? And we're buying off the low of that channel, right? We've talked about this a couple times already. And again, I cover a lot of these bases, right, inside of our free trading course. How do we sell this thing, though? How could I sell this thing as it goes back down again? That's a great question. A very specific entry pattern. Because remember, you've got a bull market right now. So for me to be a seller, what do I need? I need to let the buyers try a couple times and fail. Because I just don't think that the buyers are going to go up and then straight back down again, right? They're probably going to try to buy the pullback once, and they'll probably try it again, and that's exactly what I'm looking for to sell it. I want to see the market try to go higher. I want to see it get stuck around that measured move. I want to see buyers try once to buy the pullback. I want to see them try twice to buy the pullback. Once those buyers try once and try twice, yep, now I know the buyers are fully committed, and now I can sell right back down into that trading range, right? It'll kind of look like this pattern back here. Strong move down, let those sellers try once, let them try twice, and they're buying into it, right? Opposite direction. Strong move up, buyers try once, buyers try twice, and we're selling into it, right? You'll notice how I draw this. Lower lows, buyers try once. You know, think of it this way. 38.2% buyers buy once, right? That doesn't work. Pulls back to the 50. 50% buyers now, right? They buy the halfway point, right? Once they're all in, now I can sell right into those stops, right? We call these nested, right? Nested failure patterns. And I talk all about these in that free trading class. And of course, we go over all the details right inside of our membership classes. So guys, that's the way I want to be a buyer on this. This is the way I want to be a seller on it. Now all we need, right? Now all we need is to get that game out of the way, right? Get back to our charts and do it again tomorrow morning. So don't forget, guys, right? Tomorrow morning, 8 o'clock Eastern time, we'll be right in our trade room with all of our members. 8 o'clock Eastern time, we get together, we go over all of our rules, all of our patterns, and we open up our charts. We update our charts, we plan the strategy that best fits that day, and we execute the strategy together. So I hope I see you tomorrow morning, 8 o'clock Eastern time. If not, make sure you join up on our free trial. Get a great free trial right to the left of me here, right on the website. Call me in the office if you have any questions. I've also got live support. If you don't have a telephone, right, use that live support here as well. And as always, guys, it is such a pleasure to be with you all every evening on this newsletter. Come see me tomorrow morning in the trade room as a client, or come back and see us again, same time, same place, in tomorrow night's newsletter. As always, my name is Joseph. Great to have you here. Be well out there. Be nice to each other. Have fun with the game tonight. And I'll see you guys tomorrow morning. Adios, amigos. Bye-bye for now.